Good morning and namaskar. Today we'll take a look at another pharma company, Mangalam Drugs and Organics Limited, with reference to its Q2 FY21 results. Mangalam Drugs and Organics, based in Gujarat, started operations in 1977, long ago. It is manufacturing APIs and intermediates at Vapi, Gujarat. It has two facilities at two locations and one R&D laboratory recognized by the Department of Scientific and Industrial Research, Delhi Government of India. So today it has got a worldwide reputation as a single-stop destination for frontline anti-malaria drugs and vaccines. Mangalam has a diversified product range, having synergies in operations and economies of scale. It is among the top companies in Asia in all the products that it makes, and is the largest manufacturer of some of its products in the world. It's presently focused on active pharma ingredients, that is APIs, then intermediates, and then specialty chemicals. It has WHO's GMP certification and EDQM approval for its API manufacturing plant. It is also having an agreement with the prestigious Clinton Health Access Initiatives under its Fight Malaria program for supply of anti-malaria APIs worldwide. Now the board of directors. Shri Govardhan M. Dhoot is the chairman and managing director. Vijayamohan M. Dhoot is the executive director. First, let us take a look at the latest annual report for 2019-20, that is for that year. A few excerpts I am giving. They have not paid any dividend for that year. They have also not transferred any amount to the reserves for that year. But the company says it is again back on the growth path. Previous year it had incurred a loss. The revenue for the latest year 2019-20 is 282.35 crores. It is back on growth path. It registered a growth of 24% over the previous year. Previous year was 227 and current year is 282. The company has achieved an export turnover of 91.92 crores as against just half of it, 42.33 crores for the previous year. The growth is in exports is 117.16%. So domestic sales have increased, export sales have increased, therefore increased profitability of 8.25 crores net profit against last year's, that is previous year's loss of 8.03 crores. Previous year 8.303 crores loss, 1920 year 8.25 crores profit. Now what's the future outlook? It is strengthening anti-malarial and antiviral businesses during the initial months of 2019-20. And it wants to go for backward integration for making the raw materials for its APIs like acyclovir, primaquine, sulfadoxin and DBA. For all these things, now it is making APIs, it wants to make raw materials, backward integration. So that helps, central government's Make in India drive. So it wants to avoid dependence on other intermediaries. One of the main things it manufactures is hydroxychloroquine API. So it was used for COVID-19 for frontline health workers during March this month. In coming months also, it will supply hydroxychloroquine globally alongside developing APIs like favipiravir, which are in advanced clinical trials. Now, So it supposes a bright future. Backward integration will help it. Now let us look at the quarterly results for the latest quarter. Q1 was a bright quarter. Q2 is slightly less but still bright. Net sales are 97 crores against 104 crores in the previous quarter. But earlier quarter, that is a year ago quarter, is just 67 crores. 97 now, 67 last year same quarter. So year on year 44.24% growth in net sales. But quarter on quarter there is a slight degrowth, minus 6.38%. That was to be expected. First quarter had that hydroxychloroquine very huge sales. Total expenditure, if you see that, 81 crores in Q2 this year, 92 crores previous quarter, and 63 crores year ago quarter. Year on year, there is a growth of 28.57% in total expenditure. But quarter on quarter, there is a decrease of 11.96%. Look at that. Sales improved by 44.24%, but expenditure improved by 28.57% only, much less. Therefore, profitability has improved very well during the current quarter. Now, net sales decreased by 6.38% quarter on quarter, but expenditure decreased by 11.96%. That way also, the current quarter, that is Q2, has much better net profit. See, actually raw material consumption has grown by 72% year on year and 13.6% quarter on quarter. So that contributed to more expenditure, but totally expenditure growth 28.57% is much less compared to the sales of 44.24%. So net profit has increased by 1,269%. Net profit is 11 crores for the current quarter. Previous quarter, though brilliant, net profit is less, 8.3 crores only. Current quarter is 11 crores. Previous quarter is 8.3 crores. Year ago quarter is just 0.81 crores. So huge increase in net profit, more than 1,000%. And quarter on quarter also there is improvement, 33.61. Sales were more in the previous quarter, but profit is less. Basic EPS is 7 against face value of 10 rupees. Equity share capital is 15.83 crores. So overall you can say Q2 is in some ways much better than Q1. Q1 had huge sales growth. Now sales growth came down in Q1, sales growth was more. Q2 sales growth is less, but profit growth is higher, much higher. So overall, Q2 is a good quarter. Now current market price is around 143 rupees. Based on this latest market price and latest EPS, price earning ratio comes to 5.11, which is very low. Volumes are good, 1,57,000. So selling and buying is easy. 52 week. I always say that because you don't get trapped in companies with low volumes. 52 week low price is 20.4. 52 week high is 175. Current market price 143 is closer to 52 week high. Will it reach that? It depends on market sentiment. People have not seen the results in proper light. The results of the latest quarter is not bad at all. Profit margins have improved. Sales have not come down much. Now, let us also see the annual results. See, last 5 years, how did it fare? Sales have not increased at all. 5 years ago, the sales were 295 crores per annum. March 2016 year, 295 crores. March 2020 year, 282 crores only. So compared to 5 years ago, the sales are flat. But compared to the previous year, March 2019, then 227 crores only, now 282 crores, there is a jump. Compared to previous year, there is a jump. Compared to 5 years ago, it is flat. Net profit also, compared to previous year, that is March 2019, then it was a loss of minus 8 crores. In March 2020, profit of 8 crores. But it is nowhere near to March 2017, 22 crores. March 2016, 16 crores. March 2018, 19 crores. Now only 8 crores. So when will it reach those profit levels? We'll have to wait and see. So sales and profits for the last year were better compared to the previous year, but not better compared to the earlier years. So Mangalam has a long way to go in improving its profit level to the olden days and going beyond that. See, compared to 5 years back, now the profit should be 100% more. The sales should be 100% more, but sales are flat. Okay, historical prices: 3 years before 164, 2 years before 74, 1 year before 29, 1 month before 145, 1 week ago 149, now 142. So compared to 1 year before it, the prices had fallen to 29 also. If somebody had purchased then, they would have reaped good profits. But 3 years before 164, now 142, it has come down. We'll wait and see how Mangalam fares. It has got scope, it has got potential, but it's not proving by higher sales and higher profits. If it improves its sales, it should not depend on just hydroxychloroquine, which is a COVID-19 product. You should go beyond that. Okay, now shareholding pattern. Promoters hold 50.53%, but till June quarter, it had pledged 61.89%, very high amount of its shareholding, 61.89%. But in the September quarter, that pledging has been reduced to 33.57%. So 33.57% also is high. I think the management will reduce this pledging in the next quarter. So promoters holding is very good, 50.53%. Pledging earlier quarter 61.89%, not at all good. Currently 33.57%, down by 50%. That's also not very good, but I think it is on the path of reducing this pledge. Dividends very low, 5%, 2% like that. That's how it was giving. That too earlier. Last year no dividend. Last before year last no dividend. Cash flows, net cash flows are zero. Operating activities, of course, it has got 30 crores. Investing activities are low at 6 crores, minus 6 crores. Financing activities minus 23. So it has paid a lot of money for some purpose. Investing activities are low last year. Hopefully current year investing activities will be higher. See, if you have cash flows going into investing, future sales and future profits will improve. Remember that. Book value has been steadily improving last 5 years, from 42 to 65 it has come. Gross profit margin is low, 8.8%. Operating profit margin 5.89%, very low. Net profit margin 2.92%, very low. But it is much better than minus 3.52 previous year. Hopefully it will improve in the coming quarters and coming months. This is of course for the last year. Return on net worth is low at 7.93. Return on capital employed is reasonably good at 13.74. Return on assets is 3.57. That is not bad. Current ratio 1.09. Okay. Debt equity ratio 0.44. Debt is low. Debt equity ratio shows for the last year 0.44, debt is low, but pledge is high. So overall, Mangalam has done reasonably well in Q2, and it should perform better in the coming quarters. But it should not depend upon hydroxychloroquine because that is a temporary affair. Now net profit is 11 crores in September quarter, which is very good. Suppose it continues this 11, etc., it can clock something like 40 crores net profit, whereas for the last year it was just 8 crores for the whole year. Now for the current quarter itself it is 11 crores. That way speaking, Q2 is good, Q1 is also good. Let us hope Q3, Q4 will be better. Thank you for listening. I'll be back with you with another very good quarter. Mangalam Drugs is a good company. You have to watch it. It has not been consistent in the previous years. That's what I'm trying to tell that. Pledge is still high at 33%. Of course, it is down by 50% from 65% onwards. So keep a watch on Mangalam Drugs. Good company, likely to improve further. If it improves further, it becomes a worthy candidate for investment. Thank you.